Okay, hello traders. Welcome to this live intraday strategy webinar. Today is Tuesday, March 26th, and I'm Michael Boutros, currency strategist with SB Trade Desk. Great to be with you guys here this morning. Wrong service. Good to be with you guys. Peter, Iman, Jaya, Pooja. We got Kamal in the house. Mark. Great to see you guys. Peter says, "Hi, Mike. Thanks a lot for the stuff on the SPX. It's been good. More than welcome, Pete. Glad you're making headway with that. The levels are still pretty clear. We'll take a look today. Iman says, Michael, what a lovely setup. Levels you gave us. Raise my chapeau. Raise your hat. Tip of the hat for you, huh? Thanks, Iman. I appreciate that. Pooja saying it's being a pain logging into the webinar is a minimum of 3 to 5 minutes on a good day. Sometimes even have to try about 10 times. Pooja, are you getting an error or is it just lagging with the login? Is anyone else having problems in the room? Please do let me know. As far as I can tell, everything on this end seems okay. Pooja, worst comes to worst. Iman says no problem here. Worst comes to worst, Peter. Pooja, excuse me. Uninstall the GoToWebinar software that you have on your computer and reinstall it. Sometimes that may alleviate it, but do let me know. Iman says I am short gold 1322, cut half at 1313. Appreciate the near-term setup, Iman. You took the words out of my mouth. That was the setup. 1313 is first level. We'll definitely take a look at that. Pooja says it gives me a timeout error. Okay. Let me throw that to the tech guys and see what they give me if any answer. Sorry about that, Pooja. Keep me updated, okay? Okay, so let's jump right in. Lots to discuss on the menu for today. Obviously, DXY, Euro, dollar CAD, gold from last night. We're going to hit the SPX here for Pete. Sterling, crude. Look, crude's making it back to that key resistance level. I'm still not on the long side. Still at risk, okay? Below 60. There's no if, and, or buts about it. It's making another attempt here, but we'll take a look at that. And then we'll round out the house with Kiwi. Any other questions or trade setups? As always, feel free to let me know or drop any messages on the message board. I will try to uninstall and reinstall. We'll let you know. Thanks, Pooja. Yeah, keep me updated. Okay, let's jump right in. The update for DXY was actually the previous day. I do want to go over this just to give a grand picture of where we are right now. Things are getting kind of messy on the DXY. We went over this in daily effects yesterday. I don't want to get too over it again, but again, the major key focus range for the DXY and the weekly charts, just want to highlight that we're sitting slap in the middle of the range, literally the 50% mark of the 97.87, 95.66 threshold. Just keep that in focus, okay? Momentum on the weekly basis is just flatlining. So there is no clear directional near-term guidance here for DXY. On the daily chart, again, guys, the monthly opening range is intact. We're sitting right in the middle of that as well, straddling that 100-day moving average, momentum at 50. So when I try to tell you guys that there's, the momentum, the push is just not there, it's showing on all time fronts, whether it's the weekly, whether it's the daily, whether it's the intraday. Here's what the scalp looks like. And here's what the levels look like earlier in the week. Here's the Sunday open. We talked about support right here, right on 96.40s, I think is the level I gave you, 96.37, okay? We registered a low at 96.41. Here's the weekly opening range sitting at support, okay? Like I said yesterday, guys, in the webinar, I'm still working under the same assumption. Okay, the grand risk or the ideal scenario is that you see another spike higher in the dollar, 96.96, 97.10 max. Okay, and that's where it starts to fail again. If it breaks this slope, weekly opening range low, you still have to contend with 96.15, 96.22, and this, my friends, is the breakdown zone. Okay, if we get below the monthly open, if we get below that 618 retracement, the near-term advance, you're looking for 95.80s, basically that 200-day moving average, and then again, key confluence support unchanged down at 95.66, 95.60. Okay, so don't get caught up. We're still waiting for some clarity. Look, there's not much data on tap. You got, consumer confidence, whatever, that just came out. But you're basically looking towards Thursday. We get the third read on fourth quarter GDP here in the United States. That said, watch price action. I still think the trade here is for a move higher in the dollar before it fails. ultimately I do want to try to take a short targeting monthly open support again. Okay, really hairy here on the DXY. So if you're not positioned, don't worry about it. Sit pat, and we're going to see if we can't get a stretch for another push higher before this thing turns. At the end of the day, there's really not a clear setup here because you're sitting mid-range. Weekly opening range intact, monthly opening range intact. You're not near any extremes. So let's see if we can't get some play here in DXY later this week. Any questions on the dollar? Not much to write home about or get excited about, but certainly we need to map out those levels. So that's number one. Number two, here's euro. And here's what we looked like yesterday. So again, the weekly chart, nothing really to write home about here. Again, you're sitting very similar to the DXY, mid-range of a critical, or mid in the middle of a critical range. It's basically 112.31 is going to be the low week close, and then the upside 114.45. You guys know that's the yearly open. So we're still looking for a break of this key range on the weekly charts. Not much momentum. Okay, daily looks like this. And as I said in yesterday's update, I still think the move is for a trade lower in the euro before mounting a larger reversal. It's very similar to what we're looking at with the DXY. So before I get into the intraday, again, here's the daily, right? I just want to highlight that 113 level. It's going to be that swing high that we made back in November of 2016, the pivot break in 2017, swing low in 2018, pivot this year. We're sitting there right now. 618 is just lower, 112.80. Okay. Key resistance 1370 is still going to be the level to beat. That's the monthly open. You have the 100-day moving average there and former slope resistance governing that top side. So this is your critical range right now. If you get a downside break, we'd be looking for exhaustion ahead of that lower parallel. Okay. Again, as a side note, I don't quite think we get that low, but just to show you on the daily chart, the risk with a move below 1280. Now, intraday, here's what we're looking at. Okay, and here's what the weekly open looked like. So, broke to the weekly open. You had a basic slope here off the highs. Wasn't too crazy about it. You know what I mean? 38.2 retracement was 1340's initial area of resistance. We maxed out at 1331 before turning. Here's an attempt to move higher today and failure. Okay, this constitutes a 2-hour outside reversal bar off the highs of the session. So that does shift the focus lower. Again, weekly opening range lows is just beyond where we are right now. We're at about 112.80. And then you have 112.83 rather, and then you have 112.80, which is the 618 of the advance. That's where we grounded out on Friday. So if we get the downside break here, the near-term slope that we've been following, remember there's two slopes here. The daily slope is a little bit bigger using the lows off of last year and this year. But the near-term slope we're watching here on the intraday chart is just off of this year's low. Here's your February-March low. The 618 line of the parallel caught resistance to the pip. There's a convergence on the yearly opening at 1445. Here's the 618 on the underbelly, a little bit of a bounce. Here's a push through. So if we get that downside break, the lower parallel comes in around 1240s, 1250s. And again, 1215 is last year's low. So if it were to break intraday and spike into this region, recover, I still wouldn't get too bearish. I still would think that's, would count as support, but we do need to settle above this slope. Okay, the reaction we got here, the reaction along the median line, if we do break that parallel, forget the long euro. At that point, you're looking for a larger breakdown. So immediate risk for a move lower, ultimately looking to find some support above 1215 for an exhaustion low to buy here in euro. And even looking at this thing, guys, from a momentum standpoint, since last week's rally, you saw, a good lesson here in RSI. We like to talk about this all the time. Breach above 60 or above 50 rather. You saw multiple breaks into overbought, support at 50, multiple breaks into overbought, support at 50. This is a change in behavior. It's your first probe into oversold since the low. And then on the rally in near-term price, failure ahead of 50 suggests that the momentum is still on the side of the bears. That said, looking for possible entries a little bit lower down. Any questions on euro before I move off here? Do keep in mind that tomorrow morning you do have comments from ECB President Mario Draghi. He'll be speaking in Frankfurt, so um, could offer some volatility. But at the end of the day, the price action looks pretty clear as far as what we're looking for. All right, moving right along. Looks like there's no questions here on the euro, so let's hit dollar CAD. That's number 3. And here's what dollar CAD looked like yesterday. So big level that we were talking about, and I'm so happy that this is materializing because we talked about 34, 37, 34, 35. It seems like years now. It was the 2017 Open. It was major level that we were looking for as far as a pivot in price. We broke through it last year and sailed through it again on the way down. That was the highs that we were checking earlier in the month. 2017 Open, 618 retracement of the near-term decline. The daily chart looked like this. Okay. So you have your monthly opening range highs just higher. Here's what the intraday chart looked like. We had a near-term slope that we were working with off last week's high. We noted into the open of the week that we were trading right below that level. 34.37, 34.35. You had the upper median line parallel there. You had building, well, we already went over this. It wasn't true divergence, but it was looking a little tired. And the risk was for a near-term pullback. Now, on whole, guys, you're really not looking for anything deeper than 33.70 on the initial approach, okay? Because that's just the median line. It's in an upslope. If this holds, strong support, you may actually just prepare for the breakout. But the first trade or the first focus for me was for a drop into that parallel or into that 38.2 retracement confluence. We almost got there before turning. Here's the live chart. So I woke up pretty confident this morning when we were up, and this thing was dribbling down near 33.80. Little bit concerning here on the rally, but if we hold 34.15, that 618, again, this is the 75% line, excuse me, of that pitchfork. And again, perfect touch there, nice touch there. If we fail here at the outside reversal day close, that's from the day that we made back here, right? On the, what was that, March 8th. If we hold there, it still could work, okay? But that was kind of where I want to see. If we break through this, my limit is out. I'm going to get out at break even or better. But so far, looks good. So far, so good. It might take a little bit longer to get this thing moving, but 33.70 is going to be the initial target. I want to see a reaction there. If you get a stronger rebound, I think you get a move back towards 34.37, okay? If the U.S. market opens and this just continues to climb higher, again, if you're in the short, guys, break even stop, you're fighting an upward trend. Okay, the play was for this corrective move off the upper parallel, only looking for a 38.2, nothing fancy. Again, I still think you can get it, but just be prepped here and watch for a reaction 34.15 on the way up. Upon 12.15 break, is 11.86 the next target, E-Man? You're talking about euro? Yes. Yes. So E-Man is talking about if we break 12.15, what's the next downside target? Absolutely, it's 11.86, 100%, yeah. So remember, just to recall, guys, 11.86 was the huge, massive 618 retracement of the multi-year ascent off the low from 2016, 2017. So absolutely, if that does break, that's your first target, E-Man. I would take you to the weekly chart and just show you the next downside level below 11.86 would actually be the multi-year slope off the 2015 lows. That takes you down kind of near like 1100 or the 11 handle. That's the risk with break below 12.15 in my humble opinion. Make sense, E-Man? Okay. And that's dollar CAD. Any questions on either of those? Yep, thank you, says E-Man. More than welcome. More than welcome. All right, moving right along. Let's hit gold. Who was in that gold trade? Was that you, Pooja, or was that E-Man? E-Man, I'm short gold from 13.22. Cut half at 13.13. Appreciate the near-term setup from you. Hey, more than welcome. So here it is, E-Man. Gold, gold, gold. It's a beautiful play. It's a beautiful play. So recall again, the weekly chart on gold has been the only thing that we've really needed to focus on for quite some time. The only thing I wanted to highlight here that's not reflected on the intraday charts, guys, is 1327. I don't have that on the weekly chart, on the intraday charts rather, for a reason. That's the high week close for the year. Kind of an objective level that I do want to see close above on a weekly close standpoint to validate resumption. So it's the only thing I want to highlight here on the daily chart. Other than that, you know, beautiful break of resistance, check of support, and rebound higher. Now, the focus that we talked about over the last couple of days was into 1323, into 1320, into 1323. The risk is for a pullback lower. Why is that? Well, confluence resistance, my friends. It's a pretty clear confluence too. So you had the 618 retracement of the near-term decline off of the February highs. You also had former slope support or channel support. One touch, two touch, it's only a two touch, but a parallel caught the highs and the break fueled acceleration. Once we broke that, it acted as resistance, pullback, resistance, pullback, and then yesterday it converged on the 618 retracement. Now that was 1321. The intraday chart highlighted the 100% extension at 1323. And that was the level that I was telling you guys, hey man, if it's going to turn, this would be the spot. I mean, it's pointless to kind of fight it. The immediate advance is vulnerable while below this zone, and we were heading into there yesterday, okay? Here was the chart. 1321, again, is that 618. 1323, again, is that 100% extension, which means two equal legs off the low. And again, the upper median line parallel for the pitchfork we've been following is right there as well. Beautiful confluence region. So the game was the short. The trade was the short. Man, I'm glad you took that beautiful entry. 1313. I would take off a little here, okay? How much you take off, again, that's up to your risk tolerance. But excuse me, in my opinion, that would be an area to take a little bit off. For me, it'd be like a quarter of the trade. Why? Because I do think you get a bigger turn here. Okay, the daily chart showed, well, rejection at 60. This was something I was looking at and talking to you guys about in the webinar yesterday. That's like your textbook rejection point. And if we do manage to post an inside day here, it would, again, possibly be an exhaustion trade. So you'd be looking for a little bit of a dribble lower. Ultimately, this is a bullish trade. Ultimately, we do see gold breaking higher. Near term, the risk is for a deeper setback. So 1313, I love that level as your first target there, Eman. If you didn't take anything out, watch on a secondary approach. 1310 is the level to watch. If we break there, you're on to 13. Okay, 1310 is the objective monthly. Oh, excuse me, 13 was the objective monthly open. Just below it, 1310 is just the objective swing high for the spike we made here. It was another objective swing high for the spike we made here on the 19th. Acceleration on the breach, acceleration on the breakdown, and again, resumption on the breakout. That converges on the 50 line for the current slope right here. If we break below this, guys, it's also the objective weekly opening range lows. So again, your Monday, Tuesday, your Monday, Wednesday stretch, you look for that high, low, high. A break of that gives you a near-term guidance, basic opening range strategies. So if we break 1311 objectively, guys, aside from Mike Boutros or Jamie Setley or anything, that would entail looking for a low late in the week. Okay, at this point, as far as resistance is concerned, the thing I was trying to kind of scope out is where would be a possible re-entry for the shorts if you're not holding it. It's been hard. I really wasn't able to identify anything. I was looking at this before the webinar to try to see if you're not in a short already, is there anything for you to do here? And it's tough. You know, the only thing I could kind of spot is this. I'm not a big fan of it. But this is how I would look at it, guys. If you're, looking for a possible position here, like that. Whoops, like that. Okay, 13.18 to 13.19. If you were to see this upswing fail here, that might be an opportunity to get in back for the short, again, 13.10 and beyond. One thing I want to note is that the critical support zone is still 13.21, 13.23. If we breach through this, do not touch the short side. Okay, we're in a bullish trade. At that point, you'd be looking for breakout and resumption up to the next target, up at 13.32. Make sense? Eman, let me know if you have any specific questions on that. Eman's amazing, Michael. Cheers. Cheers, Eman. Good luck and well played. Well played. I always am so encouraged when you guys are effectively trading the levels and really getting into it. So far, so good. Again, a weekly opening range break, objectively, 13.11 is really the next level that's needed to bring the side focus, or to bring the focus rather, keep the focus on the short side. All right, and that is golds, my friend. Any questions or comments, feel free to throw them on the message board. No change to any of the levels. They are working like a charm. Keep your eye on gold. All right, that is number 4. What's next? Spoos. Should we talk about SPX? Let's take a jump start ahead here before we get into the rest of the majors for Pete. Man, this chart, Pete, I'm sometimes it even amazes me. So here's the log chart. Remember, on the weekly charts for the SPX, we do work with the log format just as a way of better reflecting the percentage move in price. So here's SPX on the weekly charts. Again, in that format. All I wanted to highlight, and we talked about this yesterday in the webinar, is that 618 line of the pitchfork has been very nice resistance, and we tagged that yesterday and put a reversal weekly candle off that region. The other thing I wanted to note is weekly momentum firmly below 60, despite the advance that we've had since the start of the year. Something to pay attention to. Okay. Moving into the daily chart for SPX, Pete, here's what we're looking for. Okay, the level of which, or the pivot range we've been watching, is 12.12 into 12.21, still the same zone that we were talking about on the way up. Clear pivot here last year on the breakdown and resistance in 2018. Here's the drop, here's the rally, resistance, resistance, resistance. We popped through it. We acted as support just for a week or two, and then here's the recovery back. We rebounded off of monthly open support yesterday, and here's the recovery. You could get a little bit more upside, but this is the same pivot zone we reacted to here, we reacted to here, we reacted to here, we reacted to here, and so forth. So my point being is that I don't think we're out of the woods yet. I think there could be some more upside in the SPX, but Pete, that should fizzle out ahead of 28.32. Here's what the chart looked like yesterday, and here's what the chart looks like today. So the thing I wanted to note here yesterday is that, basically we're testing support. If we're going to rebound, this would be the spot. The level is 27.86 into 27.90. That's the high day close. The 50% retracement and monthly open support all match at 27.86 into 27.90. Look at how we reacted there yesterday. Beautiful. Absolutely magnificent. And even the rebound failed the median line, crashed right back lower. Again, that lateral level of monthly open support held. And here's the subsequent recovery. So on tap, 28.23 on the upside. I do think you see that. 28.32 on the upside is the 618 retracement that converges on slope basically over the next couple of hours. Okay, so heading into the US trade session, watch those upside levels. If it rebounds and it gets towards 28.23, I'd be looking to close out long positions. 28.32, I'd be looking for exhaustion, possible reentry back on the short side. If it gets through 28.32, finito. Don't try to fight it. Okay, at that point, you've converged, or you've broken not only a Fibonacci, consideration, but you've also broken the upper parallel for the pitchfork, which caught perfect lows and has been giving us really nice reactions along the median line. Guys, here's the 60-minute. It's always good to look at near-term price to see how many reactive moves you've gotten off that slope. Breakthrough, acceleration, resistance. Rebound off support, tag of median line, rejection again, lateral support, breakthrough, acceleration, right? Could see a little bit of pullback here, but all things held constant, I'm looking for failure closer to the upper parallel. So levels of interest, again, just on a stretch here in intraday, 28, 32, 23. Pete, honestly, if we get there, I'd probably look to close out any long positions. I'd be on the lookout for exhaustion. If you get the intraday stretch into 28.32, might be a decent position. But that's sort of the game plan for SPX moving forward. Any questions on SPOOs? Could see some more upside here today. Do want to see failure ahead of 28.32 for a possible move lower. Now, by the way, if we break monthly open support, you see that I've highlighted here 27.74. Guys, that would just be an initial target, okay? So if you get the downside break, I would do a reaction there because we've seen a pivot in price. I looked at this earlier. Look to the left. Look with my cursor to the left, right? Resistance, break, acceleration to the downside, support, whatever the hell you want to call that. You get the picture. So in the event of a downside break, that's your level. The bigger level would be, in my humble opinion, the 200-day moving average that brings it down into 27.53. And on the daily chart, the reason that comes out as a big level is because, again, basic upslope support, one touch, two touch, that'd be right in that zone right there too. On the intraday chart, it also converges on downslope support. If we hold this formation, basically towards tomorrow, towards the middle of the week. I know it seems like a big move. It might seem a little far-fetched to be looking quite that low. I'm not ultra bear here, guys, but we need to respect the reaction that we got off there. We need to respect the slope that we're in. And as long as price holds 28.32, I do think we do risk a little bit deeper of a drawdown here. All right, Pete says 3 times. Thank you. Great as always. Right on. I'm not sure what you mean by 3 times, but you're more than welcome, Pete. Cheers on that. Okay, who knew that we'd be covering SPX so in depth over the last couple of weeks, but the level's just been insanely clear. All right, back to the FX world. Number 5, number 6. Let's hit sterling, and then we'll come back to Kiwi. Number 6. Here's British pound. So the headlines keep swirling. Theresa May, at the end of the day, basically it looks like it's going to be a parliament decision, and whether it's going to be disorderly or not, I don't really care. Okay, at the end of the day, the levels have been sort of a mess. I was with Jamie on this one, and I do think the near-term move was lower. Before you start to rally again. Ultimately, you guys know we're bullish sterling. I've been, telling you this for quite some time. Here's the daily chart. Well, first of all, here's the weekly chart on the British pound. And ever since the beginning of the year, after we came off that critical support barrier, this was the low week close. The post-Brexit low week close from 2016 was 24.33. It's exactly where we grounded out right into the start of the year. And here's the rebound. Now, the whole point of the bearish call over the last couple of weeks has been the fact that the December range lows for 2017 have continued to offer resistance. It converges on the 50 line for this slope and has governed the highs this entire 2-month stretch. I'm a little torn still. I haven't, just a disclaimer between me and you guys, I haven't really pushed anything on pound for a while. I want to see a washout lower to get long from here, or a breakout. Obviously, if we get the breakout, it's going to be a hard trade. But, the major level on this, guys, is still 36.38, 36.75. I still think you get up here at some point. Anyway, weekly chart, right? Larger picture, you kind of stuck just below the range highs for the year. Again, the yearly weekly high week close converges on that December low. So the high week close comes in at 132.96. That level's 133. So the upside target that needs to be broken for us to clear it. And again, momentum, look at that. So if you get a 60 pop, and you get a close above 133, I'm all for it. I'm all for that rally towards 36 and change. But we need to make that occurrence on the weekly chart to validate. Okay, longer term picture. Daily chart looks like this. We're checking monthly open resistance right now, right here at 32.62. Okay, again, you got the median lines here. You got 33.60 is going to be that high from July. It's just littered, guys, with stuff up here. So how do you look to play it? It's not an easy play. Here it is on the intraday. And I'll tell you why. When we see these breaks, first of all, if this slope had merits, or if it had any merit whatsoever, on a topside break, I would want to see acceleration, which we're not seeing. Okay, it's in a little bit of an accelerated move, but here's monthly open resistance catching the highs, not too high from the weekly opening range highs. So my point being, guys, if this fails here into the U.S. trade session, it's going to be a decent short in my opinion. Above 32.62, specifically if the U.S. market opens and we settle firmly above that, it could be the resumption. You're looking for 33.63, you're looking for 34. So listen, sterling could go both ways here. I'm super nimble. I'm kind of prepping myself. If you get the topside break, I don't know that there's a play because there's nowhere to put a respectable stop against this low, which is way too far out for me. So if you get the topside breach and you get the pullback, look for support ahead of this. And if we do mark a low, that would be where the stop would be played to move higher. All things held constant, the ideal scenario. If Michael was dreaming and I woke up and I was super happy, I would want this thing to push here into the U.S. session, fail, and then make a move lower, which ultimately we could find support on a deeper cut towards 34. That's my take on sterling. I really don't know how to play it from here. So we'll see if we can't get another setback. At the end of the day, the monthly opening range is still intact. And just like so many of the setups that we talked about earlier, we're sitting right there in the middle, maybe towards the upper ends a little bit, but you're not really trading near any extremes that would suggest you have an opportunity to try to take a more stern stance in any direction or the other. So we point out the opportunities where they abide, and we point out where we want to chill and kind of sit back when necessary, and that's where we are in sterling. One other thing I'll just note, guys, quick on an ancillary sort of background information here. As it stands right now, if we were to close at these levels, sterling is making an outside daily reversal into the highs, into the monthly open resistance level. If all things stop and held constant right here, that could be the onset of an exhaustion candle near term, right? An outside day reversal higher into resistance, that's going to be your exhaustion, again, if we close at these levels. Make sense? Not the best setup, but certainly something we have to be following with all the headlines circulating. I do want to know the levels. Last week's tag of 130, I mean, that was just insane. Super duper clean. This was our bullish inval. So if you took the long from there, it was a great trade, but this was your final target because this is resistance. So if this fails here, guys, again, you might get a decent move lower. British pound going once, going twice. Sold. All right, let's hit Kiwi dollar, and then we'll go back and hit crude. Here's what the New Zealand dollar looks like. From here, I thought I had it. Here it is. So, Kiwi, the only thing you need to watch for Kiwi, I feel like a broken record every time I cover Kiwi, is the same weekly chart, guys. The whole point of it was the 69.30 level. Every time you've tagged resistance there was a decent short. You have confluence resistance there of a 200-week moving average, the 50% retracement of the entire 2018 range, and 69.41 is the objective yearly opening range highs. It's still resistance, guys. Momentum still holding 60. Still holding 60. So the whole focus is 69.30, 69.41 as resistance. As long as we hold below that, this thing is check-in resistance. End of conversation. Here's the daily chart. Whoops. right? Here's your yearly open. Here's your yearly opening range highs. You have consolidation off the highs from December, of last year. Lower high, lower high, higher low, higher low, higher low. Consolidations like this typically breach before reaching 10% ahead of the apex. So I'm looking for a breakout basically somewhere over the next 4 or 5 days in one direction or the next. All things held constant, guys. Momentum is checking 60. Price is checking resistance. There's really no other way to put this. If we breach and close above 69.30, specifically 69.41, which is the market high for the year right here, you're looking for a stretch into 70. You're looking for a stretch into 70.50. Period. End of conversation. This is big resistance. This is big resistance. Again, also watch trendline resistance here from last year's high. A parallel caught support. The break fueled acceleration. We tagged that just last week. Beautiful setup. Intraday looks like this. So aside from the fact of all the resistance levels that we just highlighted here on the daily chart, on the weekly chart, the yearly opening range highs, the 200-week moving average, all right here. Here's what it looks like on the intraday charts. Even near term, you had upslope support. A parallel extending off that high, literally caught the high last week. So look, at this point, weekly open support comes in right here. Basic slope support comes in right here. A 38.2 of the advance comes in right here. 68.65 is what we're going to need to validate the downside break in Kiwi. Okay, if you get that downside break, 68.18, 68.19 would be the 618 of the advance. Just lower, 100-day moving average. March open, just above the 68 handle. This would be an ancillary target. If we break here, the big level for me is going to be that 68.18. Okay. First things first, you got to look for a break of the objective weekly opening range, which is taking shape just below key resistance. Okay. Ultimately, the only thing I want to highlight here, guys, is this is an uptrend. The broader picture is constructive. It's just that since the beginning of the year, this thing has been in consolidation. So my point being is if we clear 69.40 on a closed basis, man, do not try to get cute. That would be a breakout any way you slice it. Questions on New Zealand dollar. You do have the RBNZ interest rate decision on tap tonight. Markets are calling for a hold at 1.75%. There is no expectations. Obviously, the devil's always in the details. So we'll see if there's any accompanying commentary with the interest rate release that could shake Kiwi positioning here. But at the end of the day, man, it's pushing up against weekly, daily, and intraday resistance. Questions on New Zealand dollar. Again, RBNZ's on tap later tonight. It's about like, what is it? It was like 10 o'clock tonight here in the US, okay, for the RBNZ. Okay, that is Kiwi dollar number 7. Any questions, comments, concerns on New Zealand dollar? All right, crude. Here's number 8. So crude prices testing, like I said early in the session, big resistance. Guys, the only thing, if you had traded crude over the last couple of months just off this one weekly chart, you probably still would be doing pretty darn well. I can't advocate for anything on the long side sub 60. Okay, near term, in my humble opinion, again, that is a big pivot in price. A weekly close above that level would be needed to look for that 200-day moving average gets you 62.71, but the 618 is at 63.68. Those are the next subsequent upside targets. I do think you eventually do hit those targets. Near term, though, we're at resistance. We're at resistance. Even if this thing pulls back all the way to 55, we'd still be in breakout territory. So look, momentum is checking. A resistance trigger on a multi-point resistance trigger, confirmed resistance trigger. Again, we can't do anything based on this until we see the weekly close, but I do want to highlight that that looks like it's trying to materialize this week. Daily chart looks like this. You're checking last year's open. Again, you're checking that 50% retracement, that range that we talked about for so long, 59.16 to 60.06. And we're checking that now. Now remember, this thing had made a objective monthly opening range break here on the 13th. So we are looking for a late month high, a late March high. It's an objective sort of bias. That being said, you're still checking a big, big, big resistance level. Okay, so look, if it spikes higher here, guys, or intraday, it keeps going. The next topside level on a daily perspective gives you the 200-day moving average. That converges on channel resistance right around 61.65. Interim support, monthly open, 57. Again, then you have slope. I'm keeping my bullish invalidation, guys, largely here at 55.50. That's still the level I'm watching. Sorry about that. As my bullish inval. All right, so intraday. You're probably thinking to yourself, well, Mike, if I'm holding long positions, what do I do? Again, if you're holding along here, I'd still be shaving some off. I don't want to necessarily tell you to jump out in case you get the breakout, but I'd be getting defensive because this is resistance. If you're looking for fresh opportunities, is this an opportunity to get short against resistance? It could be, okay? If you get a couple of things that could pan out into the US trade session today, may offer position. You have a support trigger there in momentum. Let's say it rejects here at 70 and price pulls back from these highs. Any shorts you take need to be against that monthly range highs that we made here last week. And then you'd be looking for a move towards the weekly range lows. That's right there near that 50 line. It's 58.10. And again, March open is kind of critical support here on the intraday. It all depends on what we do right here, guys. Okay, if it breaks, do not try to fight it. Don't try to get cute. Specifically, if we close above 60, remember our validations, right? We always look for the daily close to validate it. So if we look at this on a daily close basis, we never broke above 60.06. If today registers a close above that, that would change things. That would change things. But just remember, if we close the market right here, right now, really nice divergence, price action with a higher high, the oscillator with a lower high, and you got a pending support trigger on the downside. Point being, I do think there's going to be a play here soon, and the levels are all mapped out. The triggers are all mapped out. We just need to wait some patience here and look for exhaustion if we're going to fail at 60 again. Questions on crude. It's a pretty big level here. Okay, that is number 8. Okay, that's all that's on my list, guys. Let me know if you have any other questions or trade set dollar. Yeah, we can take a look at dollar yen. Here's the thing with dollar yen, guys. I haven't. I don't remember the last update I put on SB for dollar yen, but what I was looking at today is this. How do I want to say this? Let me take a step back. Here's the daily chart, okay? My problem with this is what's happening right now. I wanted to see 110.37 hold as resistance. Why? Well, here's the pivot break that we made last month, okay? The swing lows that we made there back in December of last year, you pivoted above this was support, Once we registered the high at 38.2, brought up that same level, okay? And then we had here a three-way confluence. Downslope, support, upslope, support, and when it broke, you saw the accelerated drop. On the reversal, I want to see this hold as resistance. So right now, this is concerning. If we settle the day and close above 110.40, 110.37, I don't know what I'd do. I think at that point, I'd want to go neutral. If we spike here and kind of pull back and close sub 110.37, I do like the extended play down to 109.68, yearly open support, and 109.27, that 618 retracement. By the way, guys, that retracement is not taking into account this massive drop. I hate using these wicks. They typically just don't give you good concrete levels. Look, even if we stretch it down to that low, the 236 is the exact same spot that the 38.2 was in. So whatever way you do it, guys, we're basically looking at 110.38. I want to see this thing settle a daily close below that to continue favoring the downside. If we close at this level or higher, man, it's the abomination, man. It could just rip right back to the 100-day moving average. So I'm not really a big fan of of dollar yen. Ty, I'll look at euro yen for you in a moment. Any questions here on dollar yen? Obviously, on the swing side of things, guys, nothing's changed. No stop there, still at 110.65. So hopefully this thing starts to teeter out here. But that's my interpretation of what's going on with the dollar yen. Look, this is the chart that I presented to you guys last week. When was the last dollar yen? Here it is. So here's dollar yen last week, right? And it looked great. And you guys know I don't really typically cover dollar yen or get too excited about it unless the technical setup is clear. And we highlighted this yesterday and we said, look, bearish, or last week we said bearish sub 111.76. 111.76 was the objective range high for the week, and it converged on slope. The market rallied off the median line to a high of 111.70 before completely collapsing. It took out a target 11.11, and it took out the March open at 110.76. It even took out that 100% extension at 110.50. Okay, so last week's setup worked pretty good. On the downside, all the targets got taken out. My problem is that when we broke the downslope, right, that should keep us bearish below that. So what the heck is this? If I take this on an objective stance, this looks like the weekly opening range. You set a low, you test the high, you test the low, you break the high. It would suggest that we're looking for a late week high. But that's not what the monthly opening range. The monthly opening range has us breaking lower and looking for a late month low. Guys, this is why it earns the term the abomination. I don't make these names up. Well, I do make them up for fun, but I don't make them up easily. It's just a complete fake out. So I really want to caution everyone. I want to see failure. The March opening range low is 110.76. I don't even want to see it get that high, to be honest with you. I think Jamie's stop is pretty stop on there. 110.65 is where I want to see this thing fail. Ideally, guys, it fails right here and literally starts to pull back. But I want to see it settle below 10.38 if this is going to move lower. Okay, that's my piece on dollar yen. Take it for what it's worth. The abomination. It's bound to really screw people's heads up. Literally, a headache chart deserves shelving, says E-Man. I think so too. I think so too. But the thing that everyone's looking at, and this is a good segue, E-Man, the reason dollar yen keeps coming into focus, in my humble opinion, is because of this. Everyone keeps talking about this chart. Guys, you've seen this chart with these same exact levels presented to you back in November of last year. Okay? And that was based on the fact that we had turned and made this nice reversal off of the 1981 trendline resistance. That's right, 1981. No mistake. Resistance, resistance, resistance. It's exactly what we repeated out last year. Okay, multi-year, multi-decade trendline resistance. The upslope that we've been following and the pitchfork off the lows from 2012 and 2016, the median line last year was instrumental. Resistance, resistance again. And here's the turn lower. To start off the year, we were working in a really tight opening range. Here's your January open. You set a high just below the parallel, and then ever since then, you've been consolidating below the median line, below the median line, below the median line. This is the break that changed everything, right? It broke the objective yearly opening range lows, took out a 38.2 at 252, and now we're checking objective slope support. I'm going to get rid of that 38.2 just for the sake of clarity. Okay, guys, take a picture of this chart. This chart holds meaning. Every time you go on CNBC or Reuters or Bloomberg and you see them talking about yields, change the channel and look at this chart. Okay, we're at support, guys. And the fact that everyone and their mother is starting to really scream, oh my goodness, yields 240, we're going down on yields on 240. At the end of the day, we're at support. As the people scream and yelp and yell, we're at support. This is a good spot, where you could see some a rebound in yields, a pullback in the price of the 10-year. Would you do a big update on the 10-year soon? I mean, what do you need for a big update, Ty? You tell me. You got me here. You got the cream of the crop here, Ty. So you tell me what you mean by big update. I don't trade yields. I don't tend to follow anything closer than a weekly chart, maybe sometimes a daily, because for me, it's reference. It's that information on the side that you want to kind of keep in mind. Yield curve inversion is something a lot of people are talking about, and the implications that has for the dollar and the implications that has for broader economy. Take that as the thematic storyline. But from a trading standpoint, this is a big level. I have a bunch of your old work, very macro and micro. So Ty, I agree with you on that. I always, you guys know I'm a near-term trader, but we can't be oblivious of what's happening on the big picture. So people sometimes get surprised when I publish these weekly charts or things on yields because they're like, hey, Mike, this is not really, your regularly scheduled type of updates. That being said, you have to be aware of it, right? 200-day moving average is just lower. Okay, here at 236, and lower median line parallel is right there as well. In fact, if we take, this is on log scale, so we're not going to be able to do that. Let me just see what this looks like. Okay, don't want to stress it too much, but you get the picture. And momentum, guys, checking 30 on the weekly standpoint. Here are the last 4 attempts at a 30 stab right here. The low registered a couple of weeks later. Right here, the low registered 2 weeks later. Right here, that registered the low, and here we are again. My point being, intra-week, over the next couple of weeks, we could stab lower. We could go for a test of that 200-day moving average, but long story short, look for support here in yields pretty darn soon. Okay, just as a reference, if we do break that, the 50% of the multi-year advance off the 2016 lows gets you 229. So with that said, my point, I think that's why you're seeing everyone kind of focused on dollar yen right now. So let's see if this thing can't hold these highs. Okay, euro yen, Ty, you want to look at that, right? Euro yen, well, TNX, that was number 10, and then euro yen will be 11. Okay, here's euro yen. I haven't looked at it in a while. Let's take a look and see what this thing's doing. Oy. All right. Well, in that case, okay. Um, watch this zone here. So, well, let me take one step back. I'm just looking at it, kind of objective here. He says it's messy. Yeah, it is messy. I know. Bear with me. The one thing I want to show you is this. Um, so don't stress this pitchfork so much. What I want to stress is this possible near term. You can. A lot of people look at this and call it a bull flag formation. I'm not necessarily there yet, but what I want to say is this: the key support zone that we've been looking at since the start of the year is still in play. Okay, it's 123.17 to 123.56. At this point, Ty, it's the 618 retracement of this advance from the lows of 2017. So it takes the whole 2017 advance into account. 618 is 123.50. Um, the 2017 Open, whatever. It's a multi-year Open, but that's 23.17, not the bigger level. The bigger confluence is this, the 23.56 level, which is going to be 100 off the low, off the high. So if this is just corrective, still it would beg a drop near 23.56. Slope, again, if you take that parallel, that converges there as well. And again, the longer pitchfork we've been following from last year's decline, although it was invalidated, the pivots have still been pretty good. That converges in that zone as well. So how do we get it down there is the question. And I don't really have a very clear solution here. Let me see this on the 240. So again, this would be like this drop here. This is where I would want to see a stronger reaction. Might be a great opportunity to get long, to be honest with you. But that's what I'd be looking for. And the other thing you look for in a move like this is there any slope that we can work with to get in? Hmm. So a modified shift puts it in line, excuse me, in line with the bear, with the bull flag that we were just watching, or the channel that we were just watching, and the median line comes in basically like right here. I'm kind of more inclined to work with the shift, which gets you basically a tag of the lower parallel. Yeah, 50 is gonna be right there, isn't it? Hmm. Okay. Ty, for what it's worth, my man, this is what I'd be looking at. Oof. Yeah. Okay. So this is your immediate resistance level right here. Darn it. This is your immediate resistance level right here. Okay, so 2 equal legs off the low, just using last week's low, right? The advance, boom, boom, boom. The 100 is right there at 25.23. The 38 too, the entire monthly decline, so the entire March range. It's a nice sort of holistic number. You're looking for 25.23 anyway, slice it. That's the median line. If we get through that tie, I do think you have room towards 26 essentially, or the upper parallel. But I'd be looking for reaction there. On the back of this drop, by the way, just as a side note, it does seem that it could be a possible, 1, 2, 3, 4. You'd be looking for that last 5 towards the low. So that's kind of my thought process of, look for exhaustion ahead of 123, look for support at 123.50, 123.40, and actually this would be an opportunity, in my humble opinion, to start looking for a possibility of a larger recovery, larger long position to the upside. But that's the risk. I think below 25.23, you're still risk for a washout. Ty, does that make sense? Ty says, you are so good, Michelangelo of the chart. I appreciate that, Ty. Cheers, mate. JA says, thank you, sir. You're more than welcome, JA. Interesting setup, Ty. You got me really interested in this. I'll continue to follow it for you, and we'll definitely hit it again on Thursday at our next webinar. Eman says, yes, you are. Thanks so much, guys. Appreciate the commentary. So that's it from my end. I'm over on time, but I want to thank you all as always. Good luck trading. Watch the Kiwi trade setup that we talked about right now. I don't have any positioning, but watch as we go towards the RBNZ tonight. So bigger load up at the lower parallel. Ty, for Euro Yen, yeah, I think if you get anywhere in that zone, 23.17, 23.50, I'm looking for a big move, a big reaction. It'd be a great long position because if it fails, you'll know pretty quick and we'll be out as soon as it breaks 23.12. But if it does hold, here's the last time we rebounded off of that range. Boom. Right? So objectivity. All right, guys, we'll leave it there. Best of luck trading. I will see you on Thursday. Cheers.